Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, November 7th, 2013. And in this video, we'll take a look at some of the active short trades on the site that are still offering objective entries, maybe offering those entries or add-ons to an existing trade at this time, or setting up for a new entry or add-on. And Facebook we'll start with today. It's one of the social media stocks. I made a case back on October 24th, looking at the SOCL, the social ETF, social media ETF that is. I believe that this is one of the next great bubbles forming in the market right now. The valuations on many of these stocks are just astronomical. And yeah, I do believe social media is here to stay, but at least in the near term, I think there's some very good shorting opportunities on some of these stocks, such as Facebook. So again, Facebook had recently hit the first target here, bounced to make a marginal new high, and has since come back and tested that level several times. And my expectation is that level will break soon. If and when it does, that would trigger the next short entry. So to be safe, you would have to zoom in a little bit here. Yeah, we've had a couple pierces below there. You know, conventional trader can wait for a solid close below the level, but I would say, as we can see here, each bounce, we're going up. You know, the stock is bouncing less and less on each tag of that resistance level, and my guess is the next break, solid break below the 47.40, 47.50 level will most likely open the door for a move down to the second target here at 42.48, and ultimately my preferred target, which is also the final target at 39.17. I may modify that slightly, raise that level a little bit higher, but as you can see here, this yellow line marks the move from the June lows all the way up to the recent highs, and these are the target levels that I had here. There's horizontal lines drawn there that I've had since we initiated this short trade, and that was before the stock made this peak. And I believe I posted this last time. Interesting how the 38.2 and the 50% Fibonacci levels, which are shown over here, and that's the dotted yellow lines, they line up very nicely with those two targets. So again, that's my preferred target, which would be a 50% retracement from this big move from the June lows all the way up to the recent highs here, put in early October, mid-October, and that is my favorite preferred target. Take a quick look at the daily chart. I don't want to spend too much time on Facebook, but if we notice over here all the way on the left, this is where the stock came out on their IPO. Hit a high of $45 that day. I'll try to move the crosshairs up there. And that is, I do expect some resistance. I'm sorry, support on around that $45 area. But I think once that breaks down, if you look at the volume at price histogram, that's these green and red horizontal bars, that shows trading volume at each price. And we have this thin zone between this bar here and this bar, and that comes in. This is a T2 on my daily chart. These are the unofficial targets. I may extend the targets, but this trade right now is based off the 4-hour chart, and this second target lines up roughly with my third and final target on that 4-hour chart. So again, at this point in time, I favor a move down to about the mid 39 level, ultimately on Facebook. And as you can see there, the stock did break down from this nice rising wedge pattern, negative divergences in place, and prices have continued to move lower, and I think will continue to do so going forward. And here's the social media ETF. SOCL is a symbol. This is the one I posted about on October 24th. But it's not shown here. We've had a huge volume surge, a lot of money. It looks a lot like a buying climax, or did up into the peak highs here. Prices have moved lower, and there's some really nice support here around the 18, 20-ish level, where I would expect a reaction, prices to stop. So that would be my first target. Below that, you can look at the volume price histogram, very, very thin. So if prices do break down below the 18-20 level, we'll catch. There's some support all the way down here at about 17.25 ish, and then below that, very, very thin. So we'll have to keep an eye on this one. I don't believe I have it as an official trade idea. I prefer some individual social media shorts versus the ETF. Besides, this one's very hard to get a hold of. I know Interactive Brokers, they usually have shares available, but most other brokers out there are going to have a hard time getting you shares of SOCL to short. So, okay, this is GMCR, Green Mountain Coffee Roasters. This one, I just posted an update. I believe it was yesterday. We hit the first target here, 59.70. It's a little bit of a busy chart, but we've had, there was a rising wedge here defined by these red lines. Then we set up this secondary wedge pattern defined by these orange trend lines. Prices broke down. The last add-on that I had on this trade was a break of this S2 level. Prices have moved down nicely since we broke below there, and even bear flagged. If you look here, it looks like a little bearish flag continuation pattern, and prices have made impulsive breakdown. Hit the first target yesterday. Because this trade has been on for a while, I originally had this horizontal line here at 53.15 as the second target, but this is a key uptrend line. This is a long-term uptrend line going all the way back to the July 2012 lows. I'm not crazy about it, but there were several tags back here. We haven't had a reaction off there yet, so I did want to add that on there because there is a good chance we'll get a reaction when that level's hit. Some people might want to take profits at that point, but I do still think that trend line will get taken out and this target will be hit. Now let's take a look at the weekly chart. This GMCR, assuming the market rolls over by year end, which I still fully expect to happen. We have 2 months left to go, and I think we'll see a pretty sizable correction by the end of the year set in. And this is a long term. We're looking at a 10-year weekly chart on GMCR. This trend line goes back, let's see. Yeah, so about 10 years, quite a few tags early on, all through, the beginning of the bull market back in 2009. We had another tag here in mid 2012, and prices have really gotten away from that trend line. And usually you'll see reversions back to the mean. In other words, pullbacks to the trend line. We got away here in 2011. At the end, towards the end of 2011, prices really got above that trend line. And I draw these sub-up trend lines here. So we had a break of the sub-up trend line right here, a near back test, and then prices moved down very sharply to come back and hit that long-term trend line. Now we have this sub-up trend line here that I've drawn. Prices have recently broke below. There's some nice horizontal resistance here around 40. I understand these are aggressive targets, but GMCR is one that I think will and can easily see these targets here. This 40-ish, it's a little below 40, called $38 level, and ultimately this trend line that probably wouldn't happen until at least the first quarter of next year. But for longer-term swing traders, keep in mind that I'm longer-term bearish on GMCR and may extend those targets that I have here shown on the daily chart. Goldman Sachs, GS, not one of my favorites, but still an active trade, and one I believe has more downside. This stock had moved up in this orange large rising wedge pattern defined by this upper wedge line here in the lower trend line. We had a breakdown and a perfect back test, and prices have moved lower since. So if you really strip away all these, these are what I call sub-uptrend lines. Again, these are minor uptrend lines within a larger uptrend. And Goldman has been stair-stepping with increasing frequency. As you can see here, all of a sudden the uptrends are getting smaller, breakdowns more often, and now the stock seems to be rolling over. We had peaked out here. We made a slightly lower, roughly equal high, and now this is the next sell signal and a break of this trend line. But the bigger picture, again, is the orange large rising wedge pattern, complete with multi-month divergences in place below on that breakdown. So my first target remains 147.90. Below that, if and when that breaks, as I would expect it probably will, especially if the market rolls over by year end. We have a nice thin zone below it, looking at the volume price histogram, and I think this is a very likely target. It's still only a potential target. Let's see what happens. Again, I really doubt that Goldman's going to go down to the 130 level, 128 level, wherever this is, without the broad market rolling over. So that's why at this point in time, T1 is my first and only target, and may be extended. This is GTAT, GT Advanced Technologies, a solar stock, or in the solar industry. I'm not exactly sure. I don't always dig into the fundamentals. They might make semiconductor chips, as it says here. Maybe they make solar panels. I'm not sure. Either way, it's part of the TAN Solar ETF, TAN, which is also an active short on the site. This one we had a very nice, very profitable, quick gain, and after putting this trade on, I put it on right as we broke down from this uptrend line here, pretty well defined uptrend line, and as you can see in the past, these uptrend line breaks typically lead to pretty sharp corrections. Something I should have added when I put on GTAT and the other solars, of all the sectors out there, I would rank solars right up there with, I would say the shippers are probably the most volatile sector that I trade once the traders get into them. In other words, shipping stocks can lay dead for months, years, but once the traders start getting into those, they're momentum stocks, and it's not unusual to see double-digit percentage moves in the individual shippers as well as the solars here. And we saw that the other day. We saw a big gap up on GTAT. It had hit my first target, and I was personally holding out for more and still am. I made a post. What I do is when I'm caught on the wrong side of a gap, it happens. Sometimes these gaps go your way. Sometimes they go against you. And, of course, we are in earnings season. And, my preference, I know a lot of traders will scrub their positions for earnings. And at times I do, especially if it's getting close to a final target, or for whatever reason, I may sometimes pull a stock before earnings. But for the most part, I don't. I leave it on because it's been my experience that the charts over time, more often than not, will dictate which way that gap is going to go if you have a big earnings surprise or a disappointment. In other words, the bearish charts tend to play out to the downside. Not always as in this case. Now, again, as I mentioned on the site, what I do is my strategy will be, if caught on the wrong side of a gap, let those opening order imbalances clear out. And as you can see there, the stock opened, peaked up here a little later. So what I'll do is I'll give it a few minutes, 5-10 minutes, all depends on the stock and what's going on. And then later on, later that day, set a stop just above that high of the day. Because what will happen in a lot of cases is once those order balances are moderated and cleaned out, you have a lot of shorts being squeezed out, longs piling in on the good news, chasing the stock that's already up, 10, 15%, whatever it was. So if you set your stop right above that level, you have really nothing to lose at that point. You are already going to be stopped out if you left your stop alone. So usually in the morning, if I see a stock indicated to gap up that I happen to have a standing stop loss order in place, I'll pull that stop and then set it above the highs. And if I get stopped out, then if the stock would have moved up, and it still may, I'll be ratcheting my stop down along the way. But if it were to move up and stop me out, then I'm only losing maybe another percent or so on top of a 14-15% loss in that morning. However, I've seen time and time again where that's the final move on a stock, and in looking at the chart here, what we've already seen here is we've fallen back below. This was a previous reaction high back in early 2012, and so this was a key breakout. And undoubtedly, when the stock made this new multi-year high, that brought in new longs. Now they're all underwater. So what I'm looking at here, the stock is now back to this uptrend line. It's testing. It regained this broken uptrend line. It's back testing that level now. So a break below that. We've already fallen back below those highs, and now the next sell signal here would be a break below that. Now, I'm not sure if I would be adding money to this. I'm not personally planning on doing it. I wouldn't add this. I'm not advising anybody on the site to do that, nor do I ever give specific investment advice. But that would be the next potential sell signal, especially because a break below that level would take out this reaction high. So I just wanted to talk on that one. I'm holding out, and I'm still bearish on the sector, so this may have been the final thrust for GTAT. And if not, where I think an appropriate place to set your stops right now would be right above those recent highs, this red line that I have drawn here at around, you can check it against here. It's around 985, 986, somewhere around there. Set a stop just over those highs and you'll probably be okay. And possibly that stock will continue on down lower to one of these final targets that I have here. Okay, next one up is Herbalife HLF. This was a profitable trade earlier in the year on the short side. Stock has moved up and has this nice uptrend line off the late December 2012 lows. Again, you can reference this, and all these charts are. I have static charts, and I believe I have a live link version. To the HLF chart on the site as well, and that one triggered a short entry here on a breakdown of this trend line. So we've moved about halfway down, a little bit above there now, but we've already come about halfway to the first target. I do favor T2 on this trade, 53.50. 53.30. But I like this one. We had this move down from the highs, put in a double top high. Herbalife failed here to take out their previous reaction high in early 2012, and bear flagged from there, went down, made a nice bear flag pattern, broke down, and continues to look good. Just again, one of my favorites. Tough to add on here because you're halfway down from the entry point to the first target, but again, I wanted to update this trade for anybody in the stock. And of course, if we do get a bounce off the first target level, somebody could recycle back in or maybe do an entry on a bounce or a breakdown again of that T1 level with the expectation for a move down to T2. Next one up is HOV, Hovanian Enterprises. It's a home builder. This has been a test in my patience here. The stock has broken down. Goodness, let's see. We had the original short entry here back on the breakdown of this rising channel, this yellow channel defined by this and these two parallel uptrend lines. So we had a breakdown and a back test. That's all labeled here. I'll let you read that. There's a static chart on the site as well. And, we came in and caught support here on this uptrend line, bounced off that, and we've been dancing along this horizontal support level I've had for months now. So the stock has given me no reason to stop out. On one hand, it is bullish that it's hanging in there. If you look here, there's been a lot of trading here. This is going to go either way. The stock is either going to hold this support and then break above this range. Really, if I extend this line out, you can look at these volume at price histograms. You can see how much trading has gone on here. And if not, if the stock does break down below this level, as I expect, it's very, very thin down to this T2 level, which is my preferred target, as it says down here. So not an exciting one. We've had a few breaks below that level because I did mention on the last update, I haven't clean this chart up for this video, but I mentioned that would be the next sell signal, and there was a little breakdown, but prices quickly got back up there. It looks weak to me. Now, more importantly, let's take a look at the weekly chart, and this is the reason I keep this one on. I made this case again on the site when I first, I believe, right when I first shorted this stock. We had Hovanian approaching this key resistance level while overbought on the weekly chart. And again, you can revisit that. I won't spend too much time on it, but as you can see, pretty much without fail, anytime we've reached such extreme overbought levels, there's been very significant pullbacks. And again, don't be fooled by the scaling here. This is I'm using a log scaling, and a drop from, well, heck, we can just show you. This might look like a small drop. I put the blue line here. It's so big you can't even make out the percentage. There we go. So that was a 60, call it 55, 60% drop right there. So again, it doesn't look like much, but this is a weekly chart, and when you get to these weekly levels, overbought levels, on top of that, we have this what looks like a buying climax. If you look at the volume patterns, look at this volume surge right into the highs, and that was where the volume peaked. So, buying climaxes usually indicate a lasting top, i.e. trend reversal, and after that a new bear market would be expected to begin. But again, it's hung on so far. Let's see what happens once it breaks below this level. I do expect a lot more downside. I also had this uptrend line going back all the way to mid 2011. So again, I'm giving this one a little room. PPO has moved into bear market territory, as defined by this little red zone here. So let's see what happens. As far as stops, on this one, I would put a horizontal line here around call it 560 to be safe. Give it a little margin of error, and I think that would be a nice area to tighten up a stop right now, protect profits. I know this has been a dead money trade for a while. It was profitable and still is profitable from entry, and so I wouldn't be surprised if there's really nobody still in this trade but me. But that's Hovanian. Okay, I'm going to wrap this video up here, and then I will follow up and take care. I'll probably cover the remaining attractive shorts that stand out. Again, Hovanian wasn't one of the most attractive. I just wanted to talk on that. I can't hit all the short trades in this video today, but I'll do another video, possibly a third, covering the short trades, and then hopefully I'll try to wrap the longs up within one video later today.